Hello and welcome to another update video about Polygon MATIC. Interesting development on the chart. Only yesterday we talked about the fact that it had hit Fibonacci support here that could allow it to move a little bit higher before coming down. So we've got here now the in blue, that is, so let's say the short-term bullish count, ABC. We hit the support area only yesterday. That was the, that was the 38.2% Fib level. It's an ideal target for a B wave. We hit that support and today we're already leaving it. We're moving up and we've moved from around 87 cents to 92. It's quite decent for a day, but we're approaching key resistance now. So as you can see here, we've got basically a touch point, three touch points here now. And if we break above the current high at 93 cents, I think then it can take us to $1, maybe $1.05. Or let's actually measure that, because if this is an A wave, this is a B wave, well, it actually could take us to $1.06. Yeah. So the very first target for a C wave, you don't see that very often, but it's possible, is the 61.8% extension. That only would take it to 99 cents. The 1-to-1 ratio is $1.06. The 1.618 extension is $1.18, but that is actually a little bit too much, I think, in this context, because then we need to look at the retracements as well. Then we need to review the higher level assumption. But yeah, I think it's looking good for this larger IBC pattern, but we need to break, and that's the next target for the bulls, we need to break that 93 cent level, then much more upside would be possible. What kind of wave pattern is this embedded in? Well, it doesn't really change anything. Yeah, we talked about short-term upside potential, yes, from here, but as long as it's only looking corrective, which it does here at the moment, lots of overlaps, I think it's part of this further sort of short-term sell-off count that I've got here on the chart, where I've got the wave where I've got a 5-wave decline. Yeah, so we're looking at this structure as a 5-wave move down, 1, 2, 3, 4, 5, so a bit ugly, but as an ending diagonal in a C wave of 2. So this C wave is a 5-wave move. The question is only, how do these subdivisions work? Yeah, how do they work? And we've got here, if it's an ending diagonal, we can consider each of these subwaves as a 3-wave structure. So I've got the wave 3 as an ABC as well. I did have on the chart the white count, A, B, C, which is still possible, but less likely than the blue count. In the blue count, we've got an extended B wave. So this ABC in blue is actually part of the larger B wave. So we could say A, B, C. Yeah. The reason is that this move down looked very corrective. So had the B wave in white topped here already, we would need to see actually an impulsive move down. So what I'm going to do now, I'm actually going to move this B wave up here, which means it's more likely now that we move up in an extended wave B, given the corrective move down, yeah, and the reaction to the Fibonacci support area. Should we drop below, it was 80 cents here, yeah, then I think we're going to come down straight away. But until then, my assumption will be we could see, first of all, the $1 level and then $1.06. And all of that is embedded in a larger bullish scenario where we've got a wave 1 to the upside, a wave 2 down, and would probably from this support box here, from this larger support box between 47 and 69 cents, move up in a wave 3. And again, there is nothing bearish on this chart until we drop below 47 cents. And if we really come down into this yellow support box for the wave 2 in yellow, it is most likely going to be the lower half, I would say. Yeah, sort of between 47 and 60 cents. And yeah, that's my update about MATIC. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.